to the next 5 years hold? Mangalam Malu's here with the key highlights. Mangalam, 40,000 today on the Sensex.
While it's imprudent to correlate market performance with a government performance, it is also not prudent to ignore the impact that governments have on policies, long-term earnings, as well as equity flows. So a look back at markets under various regimes as well as markets under Modi. Between 2004 to 2009, we had that global bull rally and the markets moved about 207%, 5-year compounding of close to 25%. Between May 2009 to 14, coming off that recession low base, we saw a 66% move and a 62% move in the last 5 years. So in the 5 years of Modi, both the Nifty as well as the Sensex have moved close to 60% and change. Tell you about the key indices. While the Nifty as well as the Sensex have moved 64, 62%, we had the Nifty Bank, Nifty Midcaps as well as the IT index outperform. We had inline performance with the FMCG index, but the infra stocks, metal stocks as well as the Nifty PSU Bank, those indices have underperformed. In fact, the Nifty PSU Bank is the only one which has ended in the red. Now, these stocks, HDFC Bank, Reliance, HDFC Limited, Infosys and ITC account for nearly 40% weight on the index. And when these move, the index moves as well. So 3 of them have actually more than doubled. HDFC Bank nearly tripling over the last 5 years. But we've had some losers as well. Tata Motors, 60% lower. Sun Pharma not feeling too good, 33% lower. ONGC down by about 30% as well. We've also had some underperformers who've ended barely in the green, underperformed the frontline index. We've had Dr. Reddy's, Hero MotoCorp as well as Bharti Airtel. Over the course of the last 5 years, we've had a lot of inclusions in the Nifty owing to their performance. Bajaj Finance, Bajaj Finserv, Britannia, Titan, UPL, all of them being multi-baggers. But for every multi-baggers, there are stocks which have destroyed wealth, and they, over the last 5 years, had been excluded from the Nifty, and they include the likes of BHEL, PNB, NMDC. In fact, it's interesting to know that 3 of them have been public sector units, BHEL, PNB, and NMDC. Some weakness coming in on Tata Power and GSPL as well. The big question, however, is where are the earnings? Over the last 5 years, the markets have compounded at close to around 10.5%, but the Nifty EPS between FY14 and FY19, rather FY15 and FY19, has just compounded at 3.5%, and that is a slightly poor performance. With the Nifty moving higher, EPS not moving too higher, we have the valuations which have moved higher as well. So let's see whether the earnings will grow or not.
The outperformance of India against the emerging markets this year has been quite significant. I think over the last 7 or 8 years, I think the outperformance has been over 125%. So I think a lot of money is actually forced into India, maybe not necessarily because of the economic story, although I hear the rationale behind that as well, but purely as a result of momentum. You basically stick with the winners.
It's a unprecedented second mandate. So in first you've done the cleanup. I mean, I would say that we have done re-rating in the last 5 years, and we must get the earnings growth in next 5 years. Now, whether it will happen or not, we have to see. I mean, but my sense is, yes, it will happen.
Mr. Modi is actually 5-0. If you look at it this way, he won 3 state elections in Gujarat with a thumping majority. He's won 2 elections now in the national level, again with thumping majorities. So clearly he's the transcendental politician of our era, and it's now time to start comparing him with what Roosevelt was in America in the 30s or what Churchill was to Great Britain in the 40s. So he's almost dwarfed all the opposition, and I think what it proves is that he has the common touch. He understands what the common people of India need, and that is the mandate that he's got in 2014 and 2019.
If you look at the emerging market space, we think that India should outperform. You know, the average earnings per share forecast is not particularly strong, but there are pockets. You can pick companies that will outperform. A case in point was the Indian financial sector, for example, where you can find good companies that will outpace their rivals and will outpace the sector. So over the year, we think India will do relatively well to the emerging market space.
I wouldn't be rushing out and buying everything that I want to buy today. I think that we're going to be looking for other economic factors which could drive buying decision. Markets are suggesting mid caps are at relatively record relative to the large caps lows. So therefore, it is time to fish in the mid caps.
Joining us now to take that discussion forward, Kiran Mazumdar-Shaw, Chairman and Managing Director of Biocon, Sumant Sinha, Chairman and Managing Director of Renew Power, Sanjay Nair, the CEO of KKR, Pawan Goenka, the Managing Director of Mahindra & Mahindra, Vikram Kirloskar, the President of CII, Harsh Mariwala, the Chairman of Marico. Gentlemen and Kiran, thanks very much for joining us here on CNBC TV 18. Kiran Mazumdar-Shaw, let me start by asking you, and you've put down a blog which runs into about 2 pages, I think, on what you believe need to be the priorities for the Modi government in its second term. You do believe that the foundation, the groundwork for building on some of the key projects that the Modi government had undertaken in its first tenure has now been laid, and now they need to build momentum on top of that. Priorities for the government as it starts its second term.
Yes, so first and foremost, absolutely, Shireen, a fantastic victory for, the Modi government. And I think this is a huge pro-incumbency victory, which basically tells you that people want economic stability for the country. I don't think the opposition were able to project themselves as a serious contender to provide economic development for the country. And I think this is a very important now outcome of the elections, which now allows the Modi government to build on its, what I call its 5-year strat plan that it developed in the first term. Now it's about implementation and execution of this strat plan. A number of good initiatives have been started in the first term, and now it's about really building and executing on them. The first thing, as you know, is the immediate and urgent rationalization of the GST into a single slab GST, or at least a very, very simplified version of the GST, because as you know, we are seeing a bit of sluggishness and slowdown in many sectors, including the automobile sector and a few other sectors, which is a cause for worry. We need to get back that consumer spending. And I think getting down to a reasonable GST single slab will actually, in my view, revive some of that consumer spending in the economy. The second, and I'm glad the Prime Minister, of course, reiterated his commitment to inclusive development, where I think the rural economy needs a huge attention and huge focus. I really believe we need to focus on how we are going to use, our funding schemes to revive this agrarian stress that we are seeing. And I think there are lots of interesting opportunities, especially revolving around the FPOs, because cooperative farming or, various cooperative models is going to be the way forward. Apart from that, of course, there are many other things like the Ayushman Bharat scheme, which has been initiated.
Sure. I'll come back to you for more, Kiran. You've given us two broad themes where you believe the government must focus. I'll come to that in just a second. GST simplification, the #1 priority there that Kiran Mazumdar-Shaw has articulated, and two, a much more sort of focused push on the agrarian sector, rural development, which we've seen take place in NDA's first in the Modi government's first tenure, but building on that. Sanjay Nair, I want to come to you now because, I've been looking at notes on what the implications will be for a second term. And as Kiran was pointing out, and I'm reading out from one of the notes, if the first 5 years of the government were dominated by housing, roads and toilets, the next 5 will have to be dominated by investment, jobs and nursing of the dislocated financial sector. So, Sanjay Nair, do you expect more of the same, or do you believe that now that there is a decisive mandate, perhaps a bigger mandate in many ways than 2014, we could see a radical shift even on the economic agenda?
Yeah, I think, look, I mean, this is a resounding victory, and I would say this is, as I've said before, this is music to ears of foreign investors, because you have continuity, and I think that is the most critical thing. I think in the short run, Shireen, they will have to tackle both the things simultaneously. One is the liquidity issues in the banking system, and in the NBFC system, and making sure that some of the reforms they have started continue absolutely untouched and maybe at a faster pace now that they are politically probably going to be a little less sensitive, which in a good way means that we should make sure the bankruptcy processes get bedded down, and I think the cleanup of the banking sector continues. I think that's the short term, that's got to happen right away. I think on the same day you have to start thinking about the longer term reforms. You know, we are in a cyclical downturn, we can say, but I would say secularly, growth rates have come down, and there is no way you can wish them away and just expand the fiscal stimulus. I think perforce the government, and there is no one bolder than this Prime Minister, and there is no one who is probably has a stronger degree of conviction to create jobs and economic. It'll only have to come through longer term reforms, and those, you know, Shireen, there's no getting away. It's the same three factors, okay, land, labor, and capital. So capital is the one that I understand easily, which is let's get on with banking reforms, and let's make sure you stop crowding out the private sector and encourage local investments. So just one more point, and then we come back, I'm sure. This is also the time for this Prime Minister and this government to do some dramatic administrative reforms, okay? And I don't think there is going to be any political headwinds for that. Come on, I mean, you have fantastic central economic thinking capacity and a vision, and the translation on the ground is so much disparate. So there is something getting lost between the top and the state and the execution level. I think we just got to do some dramatic administrative reforms. You know what? If I was in their place, I would take 1,000 rules and regulations and just scrap them overnight. Now, I know it's not possible, but something like that. And if anybody can do it, you know, we know that this government can do it. So,
Absolutely, drastic changes in administrative reforms. And to be fair, we did see, even in the first term, a significant number of rules and regulations being eased up, and which is why we moved up the rankings in the World Bank's Ease of Doing Business Index. But Harsh Mariwala, let me come to you. I think one of the concerns that investors had, markets had, was that would we get into an era of competitive populism? Now, given the kind of resounding mandate, the thumping victory that the BJP and the NDA return with, is that less of a concern today? Also the fact that we might not then have the pressures on this being a very expansionary budget come July. You know, all of that, does that now get pushed back given the kind of mandate this government enjoys?
See, if I look back at the reforms in the first phase of the government, I think they were more skewed towards welfare compared to the economic reforms. And I think now the time has come where we need to give fillip to the economy by taking some tough reforms, you know, land reforms, labor reforms, things like GMO for agriculture, which will improve productivity, supply chain reforms in farming area, privatization, maybe things like even farm income above a certain level to be taxed, betting tax, judicial reforms, simplifying direct taxes, reducing corporate trade. I think these are the tough reforms which the government has not undertaken.
Harsh Mariwala, wealth tax. No. The government is not talking about it, but I'm asking corporate India. Wealth tax? No wealth tax.
No, but I have one disagreement with Kiran on GST, one single slab. I think it's not practical, because if the government implements one single GST tax rates, the tax rate on the essential commodities which impact the poor will go up, and I think that's not practical. At the most, they can cut it down to 2 or 3 rates, but definitely not one single slab rate.
You know, let me ask you about the 2 or 3 things that you would like to see being done to address that. There's a decisive mandate here. The Reserve Bank and the government can, in alignment, try and address this. What would you like to see, the 2 or 3 things, very quickly?
Yeah, I think the first and the most important thing is that there has to be a massive recapitalization of the public sector banking system. I think so far what we've seen is recapitalization, but in small measures, never enough to get confidence back within the public sector banks. And so even though they account for 70% of deposits, they're actually accounting for very little of the actual lending right now. So that is one area that has to be looked at. The second area that has to be looked at really is to, I think, inject in some way some massive amounts of liquidity into the system. The RBI has tried to do that through the dollar-rupee swaps. I think more of that needs to be done. And number three, working in conjunction with the RBI, is really that we have to reduce interest rates much more than where they are right now. Inflation is still below 3%. The RBI's rates are still over 6%. There's a real rate of 3%. And if you look at the borrowing rates that infra companies like us have to pay, it's closer to 10%. We are paying 7% real interest rates, which to me is really too high. And that is really what is making a lot of the infra projects simply not viable. And we therefore have to address that, because that really is a fundamental fuel or raw material that is required for building out further infrastructure.
Okay, so recapitalization of banks much more aggressively, liquidity enhancement measures, and a rate cut. And I know India... Sure, I'll come back to that in just a bit. But of course, the clamor for a rate cut is building already. Will June 6th prove to be another boon on that front? Pawan Goenka, what is it that you would like to add to what you've heard here from your colleagues? As I pointed out, a pro-incumbency vote, do you believe that directionally we could see any significant changes, or will the government continue to focus on the agenda that had already laid out?
Well, first, let me say that it is a resounding victory, and perhaps even the most optimistic BJP supporters may not have thought that there will be such a large verdict that they will get from the country, or from the citizens of the country. A lot of things have already been said by the previous speakers, and there's already a long agenda that has been defined for the government. There are two things that I would like to table in addition to what has been said: infrastructure, agriculture reforms, labor, land, financial reform, GST, all of that has been said. I think one of the initiatives of the previous government that perhaps gotten somewhat overshadowed by other priorities in the last government was Make in India. I believe that we need to see more thrust on that, and that various things that need to be done. Ease of doing business, which was a large focus, is not going to be enough to see manufacturing get to the level where the government wanted it to, where we all want it to be. And I think the biggest concern in the long term that the government should have, a long-term concern, is job creation. And in some sense, job creation and Make in India go hand in hand. And obviously there is no overnight magic wand that one can have for either Make in India or for job creation. But what has to happen immediately in the short term, in first 30 days, 60 days, is get consumption going. We are kind of on a pause mode for last several months. And almost every industry is slowing down, suffering from this pause that has happened because of election perhaps. And I hope that by itself and with the immediate actions of the government, the consumption cycle will start going up. So if you put all of these things together and what has been talked about, clearly there is a lot for the government to do. The verdict, while it is good for the government, also spells out the expectation that the nation has from the continuity of the government. Very resounding victory, and I'm sure that there is a lot of planning has been done in the last 2-3 months on what will be the immediate sort of big bang announcements, reforms that will come up that will start moving us in the right direction.
Kiran and gentlemen, a quick break, but we're back in just a moment on the verdict and what India Inc. makes of that. We're crowdsourcing ideas as Prime Minister Modi gets ready for the second term in office. What needs to be done?